Hey, everybody, welcome to another episode of the Under the Hood podcast, hosted by Stallion Capital. Today on the show, we have Phillip Washington, who is the Chief Investment Officer of Stonehill Wealth Management, the author of Retirement Investing 101, and host of the weekly business and investment podcast, Wealth Building Made Simple. Phillip, how you doing today?
I'm good, Tim. Thanks for having me.
Of course, man. Thanks for coming on the show. And we like to jump right into getting to know you. So if you could start with just telling us a little bit about yourself, your journey as an advisor and your firm, we'd love to hear it.
Yeah, I'll give the shorter version, but I've had entrepreneurship in my mindset since I had my first job, and I had to like not be free, and that was just that. I mean, if I can tell you the level of torture, and by the way, like I don't knock people working for somebody at all, like that's cool, but for my personality, I learned early on to be told what to do and set in a place and ring up customers, like that was like death to me. It was at Best Buy. I pushed carts before and that was fun because it was more freeing. But like being told what to do in one spot, like I was like I'm only 16 years old and I plan to live a long time. Like I'm not doing this. So I wanted to be an entrepreneur and didn't really want to know what to study in college because the young cocky dude I was like, they work for an organization. Like, what are they going to teach me about entrepreneurship? So I found finance, which was like a good middle ground because I was good with math and I figured, this business thing is going to require, learning about money. So I did that and then found out about being a, financial advisor and just fell in love with the industry. So, worked for 10 years on a commission basis selling mutual funds and insurance for a big organization. And then had a little bridge where I was going to partner with another wealth manager, but ended up going out on my own 2 years after I was selling commission products for somebody. And so Stonehill Wealth Management 2016 to now. So yeah, I mean we're going on like 8 years. Um, Stonehill Wealth Management.
Yeah, man, that's awesome. And I love the entrepreneurial spirit there. Now, what made you make the switch from the commission products to running your own firm? It was still kind of people looking over you a little bit too much, not good for your personality, or was there something else there?
Yeah, it's funny. So I had always had the intention of because I studied the industry and I was like, everybody who I see they go to manage money, they went to like Harvard or somewhere and then did that thing and then went to go start a money management firm. And that was just outside of the scope of like my imagination, because I'm Houston, Texas, you know, middle income, maybe, not upper middle at all, middle income working class family. So the only thing that made sense to me in the moment was, all right, let me just go here, let me sell, because I need to learn how to sell anyway. And my thought was, if I'm talking to the mutual fund wholesalers over and over again and learning what they know, then I can figure it out on my own, which so I did, and it got to a point to where I was like, all right, they're not telling me anything that makes sense to me anymore. It was more like I call it a wholesaler talk. Like they were just telling me stuff to sell their stuff. I was like, but I know that, so it's time for me to roll, because I can manage my own money at this point. So that's what you know, that was one of the catalysts that had me go on my own.
Yeah, so there was a little bit of a mindset barrier that you had to get through, but once you pushed through that, got through with you understood that you knew as much as the people who were in the game. Basically, you're
Basically,
like, all right, let's get it. Let's go do my own thing. I love it. Tell us a little bit about where you go now. So you're managing your own money now. Overcome that mindset block. You have clients you serve. Where do you go now to stay up to date with kind of current market trends and the best financial strategies for you and your clients?
yeah. So I'm a big believer in like following your genuine interest because as you know, there's lots of ways to make money. Like I fundamentally believe if there's 8 billion people, there's 8 billion ways to make $1 billion. You know what I mean? Because like money doesn't grow on trees, nor does the banks or Fed create money. Like money is generated by the new ideas, right? Like my belief is like in the future, it doesn't matter if we're trading dollars or seashells or shoeboxes. Like if somebody produces something of value to society, then we're going to figure out what to trade for. Like money is just an invention that we use to trade things that we want. And so like I love to follow like um, my own interest, right? I stay open minded to the interest of my kids, right? Because the kids are the easy one because the kids are the most discounted. Like kids' opinions are discounted by adults all the time, right? And I call kids teens and 20-year-olds, right? People that the people that got money and built this economy, they go, oh, this is stupid. Like self-driving cars are stupid. 3D printing is stupid. Digital money is stupid. I say, do a thought experiment. Go ask your kids, would they rather have $1 million in Robux or $1 million if they plan to spend it on Roblox? And they're gonna look at you like you're stupid. You know what I mean? Because they're like, I don't care. Like you care about that. I don't care. I just want to trade something to buy what I want to buy. And like that's the biggest arbitrage for me is gaps in perceptions from people that have fell in love with their own idols, right? They fell in love with their own creations. And so the newest ideas to me are the best value because they're discounted by the market.
I love that. Let's lean into that a little bit. So you said that arbitrage opportunities, you have these old perceptions, these people who have come up, they have the resources, they've got stuck on their idols, and then you have the younger generation coming up with more of the innovative ideas who will accept it because it's like, hey, that makes my life easier and better. I'm willing to go for it. What's the process of kind of bridging that gap or capturing that arbitrage opportunity? Is some of it just waiting for the people to age out, and then it's like, hey, now the people who grew up with it are older now and they like the opportunity and they're running the economy? Or is there something you can do before they age out to get resources from these people and put it into these opportunities? Does that question make sense?
It makes complete sense. So the easy answer is part of it is just time, right? I mean, I'm a very patient person and patience has been my superpower. So part of it is time. I don't like to go against anybody. You know what I mean? Like in everything that I do, if that's what you believe, that's what you believe. And so like because we're humans just in general take a while to process change, right? So part of it is like in the next 10 years, if we can time travel 10 years from now, nobody's going to question, you know, self-driving cars as like the better option, right? Now it's just time, you know what I'm saying? And then so 10 years from now when Tesla's worth a bunch because it's not about people go, oh, this EV company is going to sell more EVs than Tesla. Tesla's not an EV company. I mean, it's an artificial intelligence company that just so happens to, operate cars. You know, as the market understands that, it'll take them a decade to realize it, but like they've already won. So now I just gotta wait. Like, you know what I'm saying? I don't argue with anybody. I just go, hey, let me go find some of the people in my generation, some of the OGs that got the money and say, hey, do you believe in this future? If so, come on the art, right? If not, it's cool. You know what I mean? But you do have a lot of OGs that are like, like they love the game, right? They're not in love with the zeros. They love the game. And those are the ones that like are who I aspire to be because they're like, hey, Philip, I feel like you. I'm 65, I'm 62, I'm 78, right? And I haven't fell in love with my own creations. I love the game. Let's go. Let's invest in the new stuff. Let's invest in the stuff that's being repurposed. Let's invest in, the future.
Yeah. Yeah. No, I love that. And I love what you said there about Tesla not being an EV company, it's an AI company. Talk briefly a bit more on that. I know it seems apparent, but I think that's a perception that will shake some people up a little bit. So hit on it a bit more.
If you take AI and then you call it like a mind, right? And so like our mind, so we become smarter and are able to be more productive in the society, the more data we process, right? And it's not just data, it's input of data, and then it's the quality of us processing data and applying it to making things or creating an experience. So then you go to Tesla and you go, all right, you got the overall theme where the trend of humanity is making things easier and easier, right? And so we keep inventing new things to make things easier and easier. So you got artificial intelligence, which is like automation. And anybody who's dealt with automation, like it's easier, right? It's easier to auto draft your money monthly than it is to manually pay the check. People understand automation makes sense. So then you go automated driving, right? that just makes more sense because you don't have people sleep behind the wheel. Like that just makes sense. So then you go, all right, if automated driving and AI is synonymous and AI is part of the future, okay, which company has more data and it's not even close? You know what I'm saying? Like Tesla's been on the road for a decade or more, right? And they got more cars on the road and like compound interest, right? When you understand compound interest, you understand the compounding effect of that advantage. And like nobody's catching it. Somebody's gonna catch the mind of Google. Never, like never. You'll never catch the mind of Google. You know what I mean? Like Google's gonna be the smartest at what it does for like a long time, for a generation. You know, so Tesla is the smartest at what it's gonna do for a generation because the lead is just Einstein was alive. Still, I'm not catching Einstein, not anytime soon. You know what I mean? Because of the compounding effect and this open-minded curiosity, right? That's what AI is. AI is open-minded. There is no resistance in AI. AI is like, hey, I'm just neutral. Give me the data. I'm going to process it, and then the engineers are always tweaking it to make the quality better and better and better and better and better. And Tesla has the best engineers. That's another key thing too for investing. When you're looking at AI or technology, like, okay, who are the smartest developers that like to work on problem, and then where do they want to work? You know what I mean? Like they don't want to work at GM. Nothing against GM. They want to work at Tesla.
No, that makes a lot of sense. And speaking of kind of what you're looking at when you're thinking about investing in these companies, I want to get your opinion on what are the important factors to pay attention to in the current market today. And then let's specifically, current market, that can be equities, that can be bonds, that can be all that. But I want to hone it down to innovation and
Mhm.
technology right now, because you seem to be very passionate about that. What are the most important factors to pay attention to in innovation and technology? And what's your high level strategy to kind of capture that upside?
Here's something I just wrote about, and I think it'll make sense. If you close your eyes or, keep your eyes open, but think about history, right? You think about what is wealth attracted to, right? Wealth is attracted to productivity, right? And what environments create productivity? Freedom, cooperation, abundant mindsets, passion, drive, transparency. And these are all relative terms, right? Because we're relatively more free as Americans than like most everybody else, right? And we're relatively most free as Americans today than we were 50 years ago. And so like it's always a trend of relativity. And so like that's one thing I look for is that feeling because the best talent wants to be free. You know what I mean? Like for example, me and you, like anybody who's like good at what they do. And the common theme is like we don't want to be free. Because if you restrict my creativity, right, then you're gonna restrict the value that we can bring to the market. You know what I mean? And so like freedom is the first thing. So if I'm looking at things and options and I see like centralization, I see like an org chart, you know what I mean? In the beginning of it, I go, once the org chart comes, I'm no longer really interested. That's a private equity game. That's a finance game. You know what I mean? And I don't do that because like that's just the game I'm not excited about. Nothing wrong with it, but I wanna, I'm interested in big returns from bringing in the future. So that's one way that I look at it that allows me to tune in intuitively, right? And then the second is because if you go down that path, you may end up getting attracted to maybe a FTX without discernment. So then you got to go, okay, I need that, but then I also need like, and I don't know how to put it in words. It's like maybe the word might be patience or like avoid the get rich quick thing. You know what I mean? But whatever the feeling is, like whenever FTX was doing what it was doing and it was doing it so fast and it was fasting all this money, and I was going, but what is their competitive advantage? And then when I compared them to Coinbase, and he was, Brian and his team were not doing any of that, but they were just steadily growing. You know what I'm saying? They were boring, right? That may be the word. Like, I want you to be cutting edge, but I want you to be boring, right? I want you to have the open-mindedness of a youngster, but the patience of a wise sage. You know what I mean? Like that yin and yang combination to me is extremely attractive because it's my personality, right? So it's embedded in who I am. So that's why I follow what I naturally resonate with because I'm a old soul with a very open mind. And so like I look for that in the management team and the developer community that's behind it, which is going to be important for like cryptocurrencies because there's no stock in cryptocurrencies. But that's what I'm really looking for.
I love that. So it sounds like there are a couple things there. It really comes down to people. Where are the really good people going, is what I heard. That's kind of like the first tier. And if there aren't really good people there, both from a skill perspective, and then it sounds like later you got to a character perspective of it, you're kind of going to steer clear. But once you figure out where the really top tier talent is, you can start to look at that organization and you're looking for two things: that kind of open mindedness, that cutting edge nature, but also the consistency that would come with a lot of wisdom in a specific arena, if you will. Is that kind of summing that up right there?
Perfect summary.
I gotcha. That is really interesting. I love how it started with top tier people. So I guess the natural question for me is, how do you know who the top tier developers are, who the top tier people are when it comes to the innovation and tech space? Because so much is new in the space.
Here's the cool part about like podcasting and like podcasts are great. Podcast, Twitter, those are great because you can get into like silos, and then if you just like hang out and pay attention, you'll be like, all right, everybody keeps mentioning this person. I'm big on psychology, right? So you got to be aware of your biases. So, like for example, some people don't like Elon Musk. Personality. I'm like, yeah, he has an annoying personality. But like, if you set aside the personality and then you understand Elon's thought process, you go, no, but Elon's attractive to wealth. You know what I mean? Like, forget the personality. He's very attractive to wealth. He's about these things: abundance, productivity, decentralization, right? A few quirks in the personality, but like cool, like I got mine too. You know what I mean? So I'm not gonna judge him. So you begin to like find the personalities and then you go, okay, if these are the leaders or people who look to in the community, it's like America, right? You look at America and everybody talks trash about America, right? Blah, blah, blah. But I'm like, yeah, yeah. America, we got problems. But if you want to say what's attractive to wealth, right? Even though our people that run the country are like annoyingly inept on some areas, right? It's still like the most free country there is. You know what I mean? As far as like free speech, and we can call our president an idiot and not be, you know what I'm saying, threatened to go to jail. Like we can have fights and arguments and it's all good. Then you go to other places where it's super centralized or they want to regulate a new industry in its infancy. And I'm like, that's not going to attract any money. You know what I mean? You got to balance it. And so I'm looking for that in the personalities that are leading the country, company, uh, you know, cryptocurrency, blockchain, protocol, all those things. But so that takes time, right? You got to like go down a rabbit hole and listen to a bunch of stuff, engage in conversations, talk to different people, like go to meetups. They got some cool meetups for the weirdos in the industry, and you get to like get in their mind and like you don't understand much of what they're saying for a long period of time, but then you go, oh, I just understood what that meant.
The key to getting to know good people and where the top tier people are is really just that connection, whether that be via a podcast, via a meetup, via Twitter, just connecting with those people, getting entrenched in the community. And then kind of looping this back into the summary, those top tier people are attracted to freedom, which is kind of what you brought back in with America. It's like when you're free, the money wants to go there because of a community of people that are free leads to that productivity, which is what is attracting that money. Now, what I am curious about is we mentioned FTX versus Coinbase. And when you're assessing risk in the innovation and technology space, and then tying it specifically to what's going on in the industry now when it comes to technology and innovation, what are you thinking about when it comes to risk management?
So for me, I think risk management is going to be, even before I get into valuations, it's going to be like the level of patience the firm has, meaning are they taking shortcuts? Are they pandering to the industry? You know what I mean? Are they like one of the things that I was really impressed with by Brian Armstrong was they were pressuring him to take a side politically on different things, right? And it was things that were near and dear to my heart, as an African American. But he's like, "No, we're not getting into that. Like, this is what we're doing, and if you don't want to do it, here's a severance package. Go work somewhere else where they're gonna do that. I'm not judging you. This is not what we're doing, though. You know what I mean?" And so for me, I was like, "Ah, man, I love that." You know what I mean? Because he's focused, clear-minded. He's not pandering. It tells me you know, there's not a lot of wasted money in the company, right? Because he's not somebody who's like he's like I'm clear on the goal, I'm clear on the mission. You know what I mean? And you compare that to an FTX, and they were just spending money like drunken sailors. You know what I mean? So I'm like, if I'm a shareholder and you're like just spending money willy nilly with my money because it's not yours, like you sold me part of your company. Like this is part of my money too, right? And so you mentioned character earlier, but I mean like character is big. If I were to say what is my quote unquote special skill, right? It's like I'm I'm genuinely interested in people. Like I love all people of all personalities. I can see the good in people. And I can see, and we all got flaws, but I also know like what's attractive to money. So since I understand personality, I'm going, okay, this way of being is attractive to money and this is not. And I'm doing my best to codify that, but a lot of it is just like the Tesla data points. Like I just got data points of being in the industry for 2 decades, and I like I can go somewhere and I can feel somebody and I can be like, man, this dude got money or this lady got money, and this person doesn't because of their way of being.
I feel you. So that kind of first threshold of risk management really is that assessing that character, assessing where they're at in terms of attractiveness to money, if you will, which is a difficult thing to codify, but you can feel it out.
You can fill it out. And then the second thing is going to be like price. So like, what's the valuation? What are they asking for? Whether it's private or public investment, like what are they asking for the investment? That helps with downside if I misjudge the character. If I buy it, properly. And some people go, Philip, how do you buy tech stocks properly? Because they're like Tesla is massively undervalued. People go, are you serious? I try to not go nerd, but you got to not think of currency. You have to like neutralize currency in your understanding of an investment, meaning like Tesla is so much valuable because like who wants to hold dollars relative to Tesla? You know what I mean? Like they're devaluing the dollar on an ongoing basis, and they're going to continue to have to pay the bills. And then you got Tesla's, which is going the opposite way of productivity, and so that creates a huge, you know, especially since they can't raise rates, right? Because the competition versus Tesla is what are you going to pay me to hold these depreciating dollars, right? 5%, not interested because you just had printed inflation of 9% last year and you still can't pay your bills. You know what I mean? So that's that's why I think it's very undervalued because you gotta adjust for, you know, the currency risk, which means I'm not gonna complicate it. I do a whole other conversion to say, okay, this is what I think it's gonna be worth, relative to the dollar, which the PE doesn't really matter anymore once you do that.
I see. I see. So taking the context into play of like, hey, what's the dollar doing? How is the government really helping the currency? And when they're giving us 5%, but inflation's going at 9%, you're like, over time, that's not looking as good as Tesla, which is just getting better and better and is getting more and more data and will just be further and further ahead because they're compounding positively.
Absolutely. And I know what price I won't buy Tesla at right now, even in current dollar terms. It's not close to that right now. And the reason for the gap is just market perception because people are saying, oh, Tesla's getting caught by EV like as long as people think Tesla is an EV company, like I can keep it's not going to catch that price. You know what I mean? But there's just a learning curve that everybody has to go through, just like they're going through with Bitcoin, just like they went through with Amazon. I still get people who go, man, what's the next Amazon? I was like, bro, like Amazon. Like buy Amazon.
I
Yeah,
love it.
yeah.
So what you tell me is we should all go buy Tesla and maybe hope not as many people watch this podcast and realize it's an AI company.
Look, I own some, so I win either way, but
Yeah. No, I love it. I got you. Well, cool, man. So when we're thinking about a portfolio geared towards asset accumulation in this market, are you looking at those kind of individual tech stock picks? What are you looking at when you're constructing a portfolio?
So the first thing is like, what are my inflation expectations, right? And my current inflation expectations are conservatively 10, 12%, right? And I adjust it based on, you know, how well the government is gonna pay their bills, how big that gap is getting, and what they're doing. But I think it's 10, 12%, and I feel comfortable with that number getting bigger because they're not doing anything that's gonna help the problem that that we have. So I go first hurdle rate, is it gonna do better than 12%? Like, is the investment gonna do better than 12%, right? And so then I'm looking at, all right, what are the because you're paying for cash flows, right? So what are the cash flows that I'm paying for today? And then I discount that and I get a current valuation, right? Discount rate, I use short-term rates 5%. So you get that. And then you go, all right, how much do I expect these cash flows to grow over the next decade? And then I project that out and discount it back again. And that gives me an idea of, all right, here's, this is a good time to buy or not a good time to buy. And is my real returns positive or negative? Like, if my real returns are negative, that's easy. That means money is going out of that asset. Smart money is going out of that asset. If it's positive, then it goes, okay, I want to buy the one that's the most positive first. Because these have all made it through my risk management filter, right? Add one to the most positive first and then down the chain. But in this environment, everything that has a lot of debt is, from a company standpoint, I'm nervous about. You know what I mean? Because in an interest rate sensitive environment, that becomes a problem. And those typically don't pass my valuation because they have so much debt, they're just not able to grow so much. Versus you look at a Apple, Amazon, Facebook, Coinbase, they don't have much debt at all, and they're growing crazily. You know what I mean? So they haven't even started adding debt yet. When they start adding debt, it gets crazy. I'm going through that process and I'm whittling through. It's part of my risk management, it's part of what I'm looking at. But I'm starting with that vetting process, which it only gives me a narrow window in the public space, not in the private space, like in the alternative space. I mean, the opportunities are so abundant that I can't even really begin to, you know what I mean? Because everything is going to be repurposed for the new digital age, and everybody is still thinking in the very old model. Whether it's, what I'm saying, you pick the business, you know, everybody's operating on old assumptions.
That is a very, very good point. And I do want to speak to alternatives a little bit now. And so you kind of talked about your risk management filters and then projections and discounts for kind of picking those public stocks in the tech and innovation space to really gear a portfolio towards asset accumulation. But let's jump to alts a little bit since we brought it up here. What are some of the ways you're really evaluating an alternative? Are there specific industries that you feel are really pumped and primed to skyrocket once they start adopting kind of new tech? Or speak to that a little bit for me.
Yeah, so the alt space for me are more, so I do due diligence for clients that own businesses, have money, and they want me to evaluate it. So it's random, what I look at because there's just so much, right? I like the Warren Buffett philosophy. You only need to own 5 or 6 stocks to make a bunch of money. And so, like, on the liquid basis, I'm comfortable there. I'm gonna I'm doing my like deep dive into private alts right now to kind of find what I like because it's all in infancy. So the deals that I'm gonna due diligence on are all, you know, sourced by clients, people that want to pay me to review it. But I'll give you like an example of something that I helped the client think through. I had a client was that owns a single family home, right? It's not the primary residence, but it's a single family home. This is an easy one. Single family home. And I said, hey, the Airbnb thing is cool. Like, you can make money. Cap rates are not super attractive in the current environment for what the competitors of Airbnbs. If you're doing like a traditional non-luxury type thing, like if you're doing like a experience Airbnb where it's high price, lots of good experience, like that's wide open. But then you got to figure out the regulatory environment for where you live, and maybe that might be good, maybe it might not be good, but that's the risk you got to do. I said, alternatively, right? Find out in your area, you can turn that thing into a podcast studio and make probably right now. You can charge 500 a day. Probably you can get $1,000 a day, charging teams that need to shoot content for what they're doing, right? And you rent that thing out, and 100, 200 days a year, right? And you look at the cash flow you can get, like it significantly increased the cash flow that the person would be able to get on like a single family property that they were planning to rent. Because if you're still renting to renters in an environment where AI is about to wipe out a bunch of the middle class jobs, it's gonna take them a while to recover, and their income was already growing at 1% a year. I'm like, that's tough. Because the government's gonna be against you with affordable housing. You know what I'm saying? You're gonna be a slumlord if you want to jack rates up too high. You know what I mean? The returns are gonna be below inflation at the level that you can increase rent at, and what you know what I'm saying, what you're getting in rent now. So you gotta repurpose it, and that was, like, one idea, that, like, massively changed their thinking around cash flow, right? And that's a super simple idea, right? So you look at real estate's one where I go, "You got all this real estate, and it's all gonna be repurposed," right? Gaming studios, my 13-year-old and 8-year-old, when they're our age, when they're in it, it's gonna be happening in a decade. There's gonna be, like, movie chains, but they're gonna be like gaming studios. You know what I'm saying? Where they can go and play all kind of games with their homies at scale. They're already one-offs in different markets, but I'm talking about that's going to be like Cinemarks on the corner because like that's just what they want to do. You know what I mean? That's another. So you take the same property of a theater, and it might be worth. I'm just gonna make up a number because I don't know how much they're worth. $2 million, right? Based on the cash flow, and then you put that on there, right? Okay, now it's generating income whether somebody's there or not because of the amount of money you can make on gaming digitally. Then you got the fact that the kids want to come play it. Like then you can sell all the gaming stuff. I mean, you know, what I mean? It becomes a GameStop Cinemark. Like the level of cash you can generate from the same space. You know what I'm saying? You just repurposed it, right? So that's happening all around all economies, you know, in every aspect. So I haven't come across that deal yet, but I'm excited. Like I want to find people who are going, I got this. What should I do?
I love it. I love it. So when you're doing alternatives, so there's kind of, there's the equity space, there's the traditional alt space that are, funds like Stallion Capital, there are other kind of hedge funds, private equity funds, all that. And, those are good alternatives, but you're also thinking just alternative ways to use current assets, like repurposing assets is kind of the one of the primary ways that you're evaluating alternatives. And of course, you look at the funds and stuff, but
Mm-hmm.
looking at those opportunities where there's that old way of thinking and
Mm-hmm.
there's that new way of thinking, then how can we repurpose this asset or this resource to accommodate the new way of thinking and increase cash flow? That's kind of what I heard there.
Yeah, and I like things that like your fun and the categories of what y'all are doing as well because I'm also seeing like the financialization of everything, right? So like with technology, everything can be financialized, whether it's a fund like yours that's helping with fill the gap in lending or what NFTs are gonna do or you know just a lot of things, and I'm like that's great because anything that moves towards freedom unlocks more value, right? And I love it, and that's why I go the alternative space is sort of like I gotta meditate when I think about it because my mind starts going, and it's like because
Uh,
there's
that's
so many
awesome.
options.
Yeah. Yeah. That's really cool. I love how you brought up the repurposing current assets because when I usually ask this section of the podcast, I am kind of thinking about those funds, but just the alternative way to use a current asset, I mean, would classify and has huge upside. Just the gaming, like there will be movie theaters that go out of business because I don't really go to the movies like my parents went to the movies, right? Like
Not at all.
I think it's a little weird to go to the movie theater regularly. And so but I'll game with my brother, right? And
Yeah,
so when they create that environment where people can come together doing what they like to do, movie theaters might be repurposed and
yeah,
homes will be repurposed into podcast studios. So I love that you brought that up. I appreciate that. And I'm curious as to what role you feel alternatives really play in a portfolio if you could narrow it down to one or two things. Maybe you can't, but just
yeah.
curious.
No, I definitely think alternatives are gonna become like the way that we view traditional stocks today. Because 100 years ago, the regular average investor didn't invest in traditional stocks, right? That was a rich people game. And so now it became mainstream, like just in the last generation. I think of it in generation like 49 years. So like just in the last generation, with the advent of Vanguard and low cost ETFs, IRAs and stuff like that, did the majority of investors began to invest in individual stocks. So it's not that long of an idea. Um, but I think as people, going back to what I was saying about people becoming aware at different stages, like when I look across the market, I see nothing attractive in owning the S&P 500, and that's the best traditional basket of stocks you can buy. You know what I'm saying? Like it's part of the portfolio, for diversification purposes, right? Because my clients are not going to invest their money the way that I invested, because when you invest in the future, it's volatile because of the perception and the media, and you know what I mean. Like just it's like the mind, right? Whenever you go through change fast, it's just emotionally volatile. Um, so a lot of people can't handle that. But I don't see anything attractive in valuations to those things, right? So as the market begins to become aware of it, right, there's already products being laid out and being created, like that are here now, that people are going to wake up to and say, "Oh, I need more, I need an alternative to my fixed income, strategy." Or, um, or I'd always, you know what I mean? Like I always wanted to own, uh, whatever office property, so I'm gonna go invest in this app, which for the record, I think it's a terrible investment right now. Office is terrible, like, even if it's tokenized or individualized, it's a terrible investment right now. But I'm just giving an example of, like, things that are available that the market's gonna come to, and so alternative is gonna be, like, mainstream, I believe, because it's the only place that return is gonna be, because it took 50 years for these companies to become indebted. It's gonna take 2, 20, 30, 50 years for the debt to be wiped out. And so, like, in the meantime, where do you invest, right? There have to be things that are, you know what I'm saying? Like money is just whatever we believe it to be, right? So there's gonna be new forms of money to store our value that are being created and gonna be created to store that value, because the smart money is not gonna put it in AT&T stock.
Yeah, no, that's a really good point. And so it's really the role alternatives play is becoming more mainstream, like becoming bigger, a larger and larger parts of portfolios. And honestly, we've seen that even in the past, 10 years, people have been coming to 5, 10 years have been coming to alternatives a lot more. It's been a lot larger part of portfolios. And so, I mean, I'm right there with you, especially when you add in the repurposing assets, repurposing current assets, because alternative funds have become larger parts of portfolios. But when people start looking at their portfolios, seeing where technology is going, and then how can I use this technology to optimize this piece of my
Mm,
portfolio? Or how can I use
mm.
these relationships in this technology to optimize this piece of my portfolio? I feel like it'll really become, it's going to be 80% alternatives, 20%, equities or
Yeah, no, I
whatever you
think
look
so.
at. So,
100%, man, because you think about, like, I was thinking about after our conversation, and I won't, we won't go into all the details, but I was thinking, I was like, man, you find a good operator that's operating in the current world, then they're gonna borrow money from your fund at a rate that is not what you can get 2 years ago, and they're gonna do it with no problem, because they're borrowing the money, like, and investing it into 30% of your opportunities. You know what I mean? So they're like, I don't care what the rate is. I'm the bank. Like, I'm just arbitraging money. You know what I'm saying? I'm borrowing this money. I'm putting it into the future. That's like I'm a physics nerd, right? So I love, like, I just, like, I'm a fundamental believer that the scientists are going to discover that the black hole that puts our sun and galaxy in orbit at the center of our galaxy, they're going to find it's a wormhole, and on the other side is another black hole that sucked in matter from that side, shot it through here, created our universe to repurpose it, because that's how everything works. You know what I mean? Like that's how cells work. That's how atoms work. That's how economies work. So why would the not like the unit? We just don't have the data yet, but I'm sure that's how it works. You know what I mean? Because whenever we discover something and how it works at the core, it's the same thing. And so we go, "Oh, I'm surprised." No need to be surprised. It all, like, it's fractal. Everything works the same way. You know what I mean? Like, it just takes us time to get the data. You know what I mean? I call it, like, you got the inventor who thinks of the idea, you got the engineer who builds it, and then you got the scientist who reveals how it works, right? And so that's everything. That's just the nature of, like, that's the fun part, is going, oh, let's take this apart and then rebuild it, better. And if you can do that, if you can do that, you're literally a master of the universe. You know what I'm saying? Like the amount of money you can make is
It's
unlimited.
yeah. No, it's very true. It's very true. And kind of speaking to that just nature of money and how it's what we believe in, I think that's such an interesting idea because when you do repurpose something and it's new and it works and it's very practical to a lot of people, you gather a bunch of people, which you know it looks like you're gathering a lot of money, but it's really you're gathering a lot of people's belief in the thing, and it just attracts money just left and right. And so I think it's just interesting how it works and how a lot of us don't think about it like that in our day to day lives, and so we can miss something sometimes. But okay, so we've talked about the role alts play of just how they're going to get a growing and growing role in portfolios. We kind of talked about how you evaluate alts, and I'm curious if there are one to two that you find particularly interesting and really want to dive into 2024. Not to endorse them or anything, but just that you feel are warrant your research.
Yeah, I'm really curious about podcast studios and yoga studios. I'm like insanely curious about it personally, just because it's my belief that the best place for people to like 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 this any time that I was down and set, you know what I'm saying? Like I was a salesperson, 100% commission salesperson. And I'd had them bad months and I go, man, I want to get a job. And then I go, but I'm unemployable, right? Because where else am I going to make this kind of money? You know what I'm saying? With this kind of freedom. And then you would encounter other salespeople and like you go, highest paid people in the world are sales. So we're all free. But it's just it's a grind. But like if you don't have a job, you go to sales, right? That was kind of the thing. So I'm saying to say as AI comes through, it's gonna be a lot of people that realize, oh, a lot of companies and people are gonna realize, oh, my page is valuable. You know what I'm saying? My social media page is valuable because I got 1,000 people who care about what I care about. And so like, you know, if I care about comics or, Black Panther, what I mean, I can Disney would pay me 50,000 a year to talk about the upcoming movies because right, Disney has a stupid budget for movies. You know what I mean? And or video games and or like you got Byron Allen's about to he put up a bid to go buy what is it, Paramount or um I forget what it is. He's about to buy one of the big streaming services and he already got investors or companies. When he buys it, he's gonna take all the content and sell it out. You know what I'm saying? Classic, classic. What you do in this environment. But I'm saying like there's so many money making opportunities from content moving forward that like paying somebody 50 grand a year, 78 grand a year to market their thing, you know what I mean? Like you're gonna have like a bunch of influencers who can do that, right? So you're gonna need podcast studios for that. Every business is gonna need a media company if they don't realize it to get your word out. 'Cause I don't answer phone calls or doors or direct messages on LinkedIn. You know what I mean? Like so, like if you want to reach anybody, you got to go digital, right? So that podcast studio idea is great. And then yoga, you know, I meditate, I do yoga. Like like once you do it, it's a learning curve. Like once you do it, you go, dang, how was I functioning? You know what I'm saying? Like I had, and I typically had relatively good clarity. You know what I'm saying? But I was like, how was I functioning in all that stress? You know what I mean? And so like that's the world's fighting right now because everybody's stressed. And so like everything ebbs and flows. The universe is gonna find balance, right? And so the solution for balance is relaxation. Meditation retreats, and meditation is gonna be like the equivalent of gyms 50 years ago, right? For the last generation, gyms, physical health was a thing. For the new economy where we did service stuff, the next generation is going to be okay, mind, body, spirit. It's going to be mind, right? Like mental health is not something wrong with you, right? Mental health is like you go to the gym not because you're fat. You go to the gym because you want to maintain feeling good with your body. You know, now mental health is going to become you do yoga, meditation, good mental health practices because like you want to maximize your body. You want to be able to pick up a physics book and understand it because you have clarity. You know what I mean? It has nothing to do with intelligence. It's all clarity. You know what I mean?
Yeah, yeah. No, I feel you. I feel that's a really great point too. I like that that clarity and that picture of intelligence flowing through, but it's blocked if you got all that stress or anger or unresolved emotional kind of stuff going on there. So podcast studios and yoga studios, that's kind of what you're looking for, looking to
Um,
learn more about.
yeah, man, I'm not just looking like I got a holding company I created that I'm studying hard.
Yep.
Um, you know what I mean? Because I think it's gonna be one on every corner.
Yeah. Yeah.
And
Absolutely.
there's a lot of corners in a lot of cities.
Well, man, I've loved the show so far, and I feel like we've touched on it a lot here, but I want to give you an opportunity to speak a little bit more to yourself and your firm. What do you feel like really sets you apart from other financial advisors? For me, I feel like it's the kind of focus on innovation and tech. But if you think there's something else you want to speak to, I wanted to give you that opportunity.
Yeah, yeah, that's one, and I might call me just maybe like a evolutionary thinker because to me, tech innovation is synonymous with innovation, right? Which is like timeless. So I don't. For me, it's not limited. It's not limited to like what people would think technology is. It's going to be more like productive and innovative ways to do what we've always done. And so I love that because that's something where I could when we if we ever invent time travel, I feel like I can time travel backwards and forwards. And if even if I don't know the future, if I just go find the innovators, I'm gonna be rich across space and time at any point. So like that's core to my DNA. I think the other part is what attracts me is there are so many people, and I'm guilty of it myself because I bought into it. I expressed it, I thought it, but I've unlearned a lot of like industry thinking. You know, like one of the ideas is plan for retirement, right? And to me, like I thought that was just stupid for me, not for anybody else. But I was when I learned about it, I was going, I'm 22. I'm like, so I gotta like sacrifice for 40 years. You know what I'm saying? You know what I mean? You want me to be excited about sacrificing for 40 years and then live the life that I want? I said, that doesn't make sense. Like, I'll do it because you're smarter than me and you got more money than me. But like, there just has to be a better, there just has to be a better a better idea than that, right? And so like, I just naturally think that way. And so I tend to find free thinkers because the world likes to restrict free thinkers. You know what I'm saying? Like, I find them and then I bring them out of my clients, right? So like, since I am so relatively intelligent, meaning I can sit down with the Fed chair or a quantum physicist. I mean, literally sat down with a guy who engineering firm helped build part of the James Webb Telescope, and we start talking about calculating, doing calculations when you're trying to do them where things are bent by space and time curvature, and like we're just nerding out. My wife is rolling her eyes, right? So I can do that at the same time. You know what I'm saying? Like, I don't wear suits. You know what I'm saying? I speak my mind, I curse. If you go to my Instagram, you'll see me doing Muay Thai in the gym. I had a couple of fights, one of them in a church, doing Muay Thai. Right. So I don't so I'm super open-minded. And so that's very attractive to people. And so I don't think it's, I don't place it relative to anybody else, right? Because some people may like the buttoned up suit type thing, and that's cool, right? Everybody gets to pick who they want to interact with. But for me, like, there's just not a lot of advisors in my space that attracts like the weirdos. You know what I'm saying? And I'm a weirdo. I'm a weirdo. I'm proud, and you can be you can be a weirdo, especially specifically for the way our culture moves. I'm talking about me and what I'm saying me and your culture is like we're just not attracted to, like, the button up stiff type stuff. You know what I'm saying? That's not we ain't never moved that way. You know what I mean?
Well, I love it, man. Last question for you here, then we'll wrap this up. What do you feel like is most important to that client advisor relationship for people that are coming to work with you in your firm?
I think, clear intentions on both sides are important of, like, what's the deliverable and what's, like, the expectation, right? Because since I can sell, since I have an attractive personality, since I'm smart, right? I can talk anybody into anything if I wanted to. You know what I mean? Um, but I don't, because I want long-term clients. And thankfully, like I really don't, my clients stick with me for the most part, right? And when they don't, it's just a natural process. If it's not like financial disaster, it's just a natural process of um they can never say I didn't tell them what it was going to be up front, right? Because I'm very clear of saying I don't market time. I don't, you know what I'm saying? Like I'm not going to tell you I can pick the best funds, right? I'm going to clearly communicate like my philosophy on just life and investing, and like you believe it or you don't, but it's not going to change. You know what I'm saying? Like it's going to be long term boring when the market drops. I'm not shuffling around anything. You know what I'm saying? Unless I miss the major thing. You know what I'm saying? And so like so that is attractive. That is attract. I am very unattractive to get rich quick thinkers, right? It's which is cool. That's by design. You know what I'm saying? And I'm very attractive to the types of people that run the types of companies that I like to invest in anyway. So it's sort of a self reinforcing cycle of like selection, because like attracts like. You know what I mean? So I try to be in emotion and feeling what I want the clients to be, and so we can feel that early on, right? And so that's part of why I'm unapologetically myself, because that's also gonna like turn off somebody who doesn't like somebody with confidence, or doesn't like somebody who's open minded, or doesn't, you know what I'm saying, like doesn't like somebody who what whatever their bias is. Like you're gonna get all of me and you're gonna see it, and then you're gonna like me or not like me. Like you're gonna love me, like I'm Elon. You're gonna love me or you're gonna hate me, and I'm
Uh,
cool with either one of the two.
I love it. I love the authenticity you bring to the relationships, and then the transparency that you start them with and keep throughout it. That's a really cool thing. Well, Phillip, I think that's all we have for you today. Thanks so much for coming on the show. If people want to get to know more about you, where should they go?
Best place is stonehillwealthmanagement.com. My podcast, Wealth Building Made Simple, is on all major platforms. So Spotify, Apple Podcasts, YouTube, audible.com, all those places.
Okay, perfect. And all of those links will be down in the show notes and kind of on our website where this podcast is posted. Thank you guys so much for watching. We will see you on the next one.